Hey guys, what's up? And thank you for coming back to Coffee with Teek, where we're talking about personal finance, investing, and it's always about the long game. I hope you guys are doing well. I hope everybody is staying safe and healthy and trying to be as positive as possible in these corona times. If you have lost anybody, our condolences go out from this community. Today I wanted to talk about the differences between saving money and investing money. Now, these are two things that go hand in hand with one another, but they are different. Saving is for when shit hits the fan. Saving is so you have something to catch yourself when you start falling. Now, the average American doesn't have $1,000 saved. There's multiple polls that show that. That's scary because that's a mortgage, that's rent, that's something going wrong with the car insurance, the car note being due. Something comes up with the kids, something comes up with school, work, anything can happen. And the most terrifying thing for me is when I don't know if I'm gonna have enough to make it happen, but I'm gonna make it work. That is terrifying. So why not put money aside? And it's hard. It's extremely hard at first. But eventually you start to perceive the way that you understand, use, comprehend, manage, value money. And it's not so hard anymore. You need to have at least 3 to 6 months saved, tucked away, that you know if something goes down, that money is there. You want to go shopping, you want to take a vacation, you need a vacation, is not excuse to dip into that fund. It's for a different purpose. That's for corona times. Now, when it comes to having your savings, I also like to add on something I like to call a buffer. Now, a buffer can be $500, $1,000, whatever it is, $300. That's enough. So if something happens, if something small happens, it doesn't take from your main emergency fund. That is also hard to get, but it's goals to shoot for and to move towards so that you can be more financially stable and comfortable. And I'm just telling you what I've learned and what works for me. Now, when it comes to investing is long term. Investing can be a year long term. It can be 5 years, 15, 30, 60 years. Whatever it is that money is put away, making money back for you, either by moving within the market and you buying it at different prices and eventually averaging a pretty decent stock value, share value, so that you are benefiting off of the yield from that company or the yield from that ETF or the yield from that mutual fund or the interest coming off of a bond. You keep putting money in with investing. The idea is that eventually you're going to get more by what you've done than what you started with. So you want to pick good investments, and I'll make another video about that at a different time. But that is long term. And again, that long term can be a year. It can be shorter, but we're thinking taxes, so a year. Or longer. And you just let that money work for you. So think about that and start planning differently and start moving differently if you haven't already started. If this year has not already encouraged you to make some personal changes in your finances and in your behavior and how you're spending your money and how you're looking at it. If it's hard right now, it will get better. It will. There's a reason for the season that you're in. As hard as that may be sometimes. But continue to stay blessed. Share this with somebody that needs it. Continue to be positive, evolving people that want more for themselves. And continue to be loving and as pure as you can in a world where it's hard to find it. Only takes one. Remember that. Have an amazing day.